Hello, I'm Carolyn Herbert from the Finance News Network, and joining me at the 2017 SMSF Summit in Sydney is Director of Switzer Asset Management, Paul Rickard. Paul, welcome.
Thanks, Carolyn.
Now, Paul, what would you say is the key takeaway message for SMSF trustees?
Well, the superannuation changes that are about to hit in less than 2 weeks' time, they're a once-in-a-decade change to superannuation. The last big change was in 2007. Here we are in 2017 with a lot more. So really, I think there are two call to actions. First of all, can you do anything about the contribution side, because all the caps are changing? So if you've got some cash around, can you get into super? And secondly, you obviously many trustees having to deal with the 1.6 cap in terms of how much they can have in the pension phase and also transition to retirement. So you need to take action again before the 30th of June. I think one other point is that, look, just if you are looking to maximise your caps, superannuation is an investment vehicle. You don't necessarily have to make the investment choice now before the 30th of June. It just can go cash at bank if you don't like the markets. But you do need to act, and there's about 14 or 15 sleeps to go.
And as you say, these new regulations come in from the start of July. So how are SMSF trustees set to benefit from the changes?
Well, it's going to be a bit harder for SMSF trustees simply because it's making superannuation a little less attractive. So for those that have got $1.6 million or more in super and potentially in the pension phase, they're going to have to think about investing outside super. So in some cases, people might argue that's a good thing. If you're still in the growth phase, then I guess the point is how you get to that. And the other strategy people are going to look at is, again, this is assessed on a per person basis. So if you've got a couple, how you can look at strategies potentially to even out that balance between different members of the couple. I think that's a really important action that a lot of members will take away and work hard on over the next few years.
So for SMSF trustees looking for income, what would your advice be?
Well, I still think that probably the best opportunities for income are in the share market. Simply that's because Australian shares have a very heavy bias towards income, and the franking system drives that. So I think in thinking about particularly equity investors, I think it's a good approach is to think about Australia for income, the rest of the world for growth. That's not to ignore the other asset classes. I'm a believer in you've got to have some property, and you should be thinking also about fixed income, and you need a diversified portfolio that goes across all the asset classes. But I think when it comes to Australian shares in particular, I think those dividend yields, the attraction of the franking credits are really important attributes. So getting a portfolio, looking at some of the products that can deliver that, I think is a really important thing to do.
So any stocks or sectors investors should be looking out for?
Well, that's a good question. I mean, I think banks are still attractive. They might be a little bit overpriced at the moment, but look, they're still going to be able to continue to pay out those dividends. They're not going to grow much, and I suppose that's a question about not expecting to have a lot of capital growth. But I think they're still going to form the nucleus of many SMSF trustee portfolios.
So Paul, what's your outlook for local and global equities markets post-Brexit and under a Trump presidency?
Look, I think globally markets still look okay. I mean, Europe probably a bit more attractive, and we'll follow the lead from the US. So if the US decides that's it, well, the rest of the world's going to follow suit. That's just the way it works. That ain't going to change, notwithstanding you might think there's a bit more outperformance in Europe than there is in the US. Australia, look, again, we're in the same situation, although I'm probably thinking that in the short to medium term, we might find it very hard to get through 6,000. We need some really strong local earnings, company earnings, and we'll get that in August when the next season kicks off. So we need to see our companies being a bit more profitable to push that through. But look, I still think that the right way to be playing those markets is fall from the long side. But maybe in the next couple of months we might see some opportunities where there'd be better buying levels ahead in the Australian market.
Paul Rickard, thanks for joining us.
Thanks, great fun. Thank you.